Hi guys, I'm Nicola McKenzie, founder and mortgage advisor here at Dun & McCarthy Mortgages. And in today's video, I'm going to be giving you important things that you should be aware of if you're looking to get a mortgage over £500,000. So stay tuned to find out more. Now, mortgages over £500,000 are typically what are considered or starting to be considered as large loans by the banks. And this is generally where you start to find that lender criteria starts changing. Now, the criteria amongst lenders often starts to change even further once you start exceeding the £1 million mark. Now, some lenders won't even lend over a certain amount at all, or they'll change their lending limits and or the amount of deposits that you may need, and also depending on the type of property that you're purchasing, they might change the criteria. So for example, some lenders will change their criteria if you're buying a flat compared to a house. So this is why when you're looking for a large mortgage, typically over £500,000, you really need bespoke specialist advice as to what your options are, because the options and the choice of lenders becomes much more limited, and therefore you risk ending up with an overpriced rate or being declined if you don't opt for the right deal. And we're here to help you avoid this, of course, so you can always get in touch with us and we are happy to help. But in today's video, ultimately, I wanted to just give you a few tips, things to consider, things to be aware of, if you are looking at taking out a mortgage of over the 500k mark. And like I said, of course, get in touch with us here at DM Mortgages because we're specialist brokers and we can help you to look at your options. So firstly, let's look at how you can qualify for a large loan mortgage. Now, the first point I want to mention here is that getting a mortgage over the 500k mark is no more difficult than getting a mortgage for a smaller sum necessarily. They're actually, contrary to popular belief, assessed in the same way as if you were borrowing a smaller amount of money from the bank, in terms of how the bank will assess your creditworthiness, your situation in that respect. So for example, affordability assessments remain largely the same whether you're applying for £300,000 or £1 million. You're still going to find that most banks are going to lend you a maximum of roughly 4.5 to 5 times your income, and then work backwards and reduce that figure based on other factors, so how many dependents you have, how many debts you have, etc. It doesn't get any tougher because you're borrowing more money, but of course you will need to demonstrate a higher income to borrow £1 million compared to if you were borrowing £300,000. Now, the reason why I said in the intro that you really need to look at bespoke and specialist advice, particularly when you're taking out a larger mortgage, is because the lenders offering those type of mortgages, like I said, become much more limited. And you'll also find, certainly when you're looking to borrow over the £1 million mark, that this is not something that generally a lot of high street banks like to do. It's a lot more often than not that specialist lenders might be the route that you would need to go down. And also there are many lenders, for example, Clydesdale, Virgin, Accord, that don't even deal with the general public. They are broker only lenders, but they are major players in the mortgage market, particularly again when you're looking at larger loans. Now, by not getting specialist advice, you could potentially be missing out on thousands of deals that are offered, not just by specialist lenders, but specialist broker only lenders. So the point here is, although you may face similar stress testing in terms of, like I said, your creditworthiness, your evidence of a stable income, etc., as if you were borrowing a lesser sum of money from the bank, you need to know which bank is best to approach, not only to get you the best rate of interest, which makes a bigger difference the more money you borrow, but also to ensure that the amount of deposit that you have and the amount that you're looking to borrow is within the limits of the lender that you are applying for, to of course ultimately improve your chances of acceptance for a mortgage. Now, when it comes to borrowing over £500,000, an area that's particularly important to you is loan to value. Now, this is a really important consideration actually for any mortgage, but in particular for those looking to borrow over £500,000. Now, loan to value is basically the mortgage amount expressed as a percentage of the house value. And the reason why this is generally important, because the lower your loan to value, the better interest rates and the more products often are available to you. Now, this doesn't always apply. So for example, if your loan to value was at 87%, then you would get the same options and interest rates, generally speaking, as if your loan to value was at 90%. But the minute your loan to value goes to 90.1%, then that puts you into a different bracket with different rates and different products and different options. Now, the reason for this is more important for you to grasp because it applies more so with, again, larger loans. Because the higher loan to value you have, the less lenders will even offer a mortgage to you when you're borrowing over the 500k mark, and the higher the rate of interest. Now, what you have to appreciate is that the higher your loan to value is, for the bank, it means more risk, because if the property went into negative equity, if house prices fall, or you default on your payments, it's less likely that the bank's going to be able to recover and recoup all of their costs. And this is why they charge higher rates of interest, and why less banks have an appetite for this level of risk, particularly where it's a larger loan. Now, one thing you also need to bear in mind with a larger loan is that lenders will cap the loan to value depending on how much you want to borrow, and this varies amongst the lenders. So for example, one bank might cap the loan to value of 95% to a maximum loan size of £500,000. They then might cap loan to value of 90% to a maximum loan size of £750,000, and so on and so forth. So if you're not a mortgage specialist, again, you're not going to know which lender caps at what level, and that's another reason why it's important to get advice. Now, if you are watching this video, then I assume that potentially you're looking to buy a property using a mortgage, move home, or review an existing mortgage. Now, if you trust the content on this channel and you've been finding it valuable and useful, then imagine the value that you would get from us helping you with your own mortgage. Now, we're here to help you get the best mortgage deal from thousands of products from lots of high street banks and building societies, as well as specialist lenders as well. Compare all of your options to find you the best deals. Now, head over to our website, dm.mortgage, and book in for a free of charge appointment today. We can help you no matter where you're based in the UK, and we can give you your options and provide you with advice so that you know exactly where to go and what to do next. And of course, if you're finding this video useful up until now, then you need to hit that subscribe button and the notification bell so that you never miss a future upload. But now let's get back to the video. So guys, this is the system that we source all of our products with, and generally speaking, we have over 12,000 products available at any one time from lots of different banks, high street and specialist. Now, I just want to give you an idea on how things become more limited the higher the loan size gets, but also the smaller the deposit gets. So let's say that we're buying a property for £500,000. And let's say that we are buying that property with a 20% deposit. 25 years. So we need to borrow 400k from the bank. That's just under the 500k loan amount mark. That's given me access to 1,699 products. Okay. Now, again, if we go over that £1 million mark, let's see how that changes things. So let's say that we're buying at 1.5, still with a 20% deposit. We are now down to 149 products. And one of the other things as well, so we've still got a lot of options, 10 pages of options, 149 products, but that's obviously nowhere near 1,166 products. So the bigger the loan size gets, the less options available, and you can see as well that we are in the main looking at specialist lenders. Okay, now if we go back, what I now want to do is highlight again what I said about the loan to value. So let's just see what impact changing the deposit amount will have in terms of the number of options available to us. So let's say that we're buying a property at £750,000, and let's say that I only have a 5% deposit. So my loan to value is 95%. I'm borrowing just over 700k from the banks. That gives me a total number of products of only 34 products. There are only 34 potential products that I'm going to be eligible for on a 5% deposit, because my loan amount is over 700k. There's not many banks that are willing to take that kind of risk. Now, if I had a 25% deposit, so loan to value of 75%, let's see where that puts us. So all of a sudden we have gone from 34 products to a total of 1,547 products. So not only is the loan size going to be one of the biggest influencers in terms of not just the rate you'll pay, but the number of options available to you, but also the amount of deposit, particularly when you're borrowing a large amount of money from the banks, is going to impact significantly in terms of how many options are available to you. Now, what I'm going to do is go on and talk a little bit about how important the interest rate is when, again, you're borrowing over that £500,000 mark. Now, guys, let's look at an example. So again, rates change daily, guys. Products change all the time. So this is just an illustrative example. So take it with a pinch of salt, but it does highlight, as of today, what products look like. And also it will illustrate to you why going direct to one bank can literally be one of the worst things that you can do. And by picking, not the best lender for your situation and not the best product, can see you lose thousands of pounds. So let's say that we're buying a property for £1 million, and let's say that we've got a 15% deposit. So I need to borrow £850,000 from the bank. If I click on search, we've got rates from 1% and above, okay? So what the figure that interests me actually more than just the interest rate alone is the true cost of the product. So what I'm going to do, guys, is assume that we're tying in initially to the mortgage product for 2 years. So 24 months is the initial tie-in period. And true cost is going to allow me to look at not just the best interest rate, but also including any fees, charges, product fees that come with that lender, because it's overall, because it's the overall cost of the product that I'm more interested in than just the rate. Just because something's an attractive rate doesn't mean when you add all the fees in that bank's charging, it's necessarily the best product. So the true cost of the product over a 2-year period is going to allow me to see what the best options are. Now, we're looking at a rate of 1.04%, monthly payment of £3,222.61, which over a 24-month initial period, that means I'd pay £78,067 with this particular product, where we add in all the product fees and everything else that lender's charging. Okay, so in this instance, guys, let's assume that I bank with NatWest, so I've just gone straight to them for my large loan mortgage. The best product they have as of today, and again, this is going to change completely depending on your loan to value, depending on the day. Sometimes NatWest are one of the best rates, sometimes they're not. It changes very frequently. But for the purposes of this illustration, had I banked with NatWest, and gone directly to them for this mortgage, then, or let's just say I didn't bank directly with NatWest, but for whatever reason I ended up going to them for this mortgage, when actually I qualified with the lower rate option, then on their 2-year initial tie-in period product, I would be paying £82,036 over the first 2 years of the product. With the lower rate product, I would have only been paying £78,000. So literally, I could have saved myself £4,000 over the initial 2 years of the deal. Now, I don't know about you, but there's a lot that I could do with £4,000 in 2 years. So that money is best spent on making sure that you've got the best deal and you can put that £4,000 to other more useful things other than paying to a lender and for a product that you didn't necessarily, or that you could have found a better alternative to. So I just wanted to show you that, to show you how the rates differ, how making sure that the interest rate you get, particularly on a large loan, is going to save you a whole lot of money, and making sure that you're choosing the most appropriate lender to accommodate your situation, and to show you how important loan to value is when you're looking at borrowing in excess of £500,000. So head over to our website, dm.mortgage, and book in today for a free of charge appointment so that we can let you know what your options are and help you on that dream property purchase. And of course, if that video has been useful, make sure that you subscribe to the channel and hit the notification bell so that you never miss a future upload. And I'll look forward to seeing you in my next video.